Dear students, today we'll go for one more problem on the topic income from salary. This is video number 16. I'm Dr. Panduranga Nayak, Principal, SBS College, Mentwal. We'll take up the problem. Mr. Arjun furnished the following details of his salary income. Basic salary 22,500 per month. This is fully taxable. So 22,500 into 12, that way you have to calculate. Then DA rupees 14 per month. So 14 per month into 12, that way you have to calculate the DA. And within bracket they have given 60% enters into retirement benefits. This is for the computation of salary for HRA or for contribution to Provident Fund, etc. Otherwise, fully 14,000 per month for 12 months is taxable. DP, the earners pay 400 per month. It does not enter into retirement benefits. So it is fully taxable. And even for HRA, it is not going to be taken because it does not enter into retirement benefits. Entertainment allowance, it is taxable, 600 into 12, so fully taxable. But if the SSC is a government employee, then deduction is available under section 16. But here, Mr. Arjun is not a government employee, it's not mentioned. Therefore, entertainment allowance is taxable, but no deduction is available under section 16. Commission on sales at 1% on sales, it is fully taxable. Not only that, this will be taken under the term salary for the purpose of HRA and even for calculating the contribution of the employee to the Provident Fund. CCA 700 per month, it's fully taxable. Medical allowance is also taxable, 500 into 12. Education allowance of which 700. He has 3 children studying in a college. This amount was given for education of each child separately. So 700 per child it is given for 3 children. So what we have to do? First, what is given we have to calculate 700 into 3 into 12. 700 into 3 into 12. So we will get the amount allowed as education allowance or granted as education allowance. Now what is exempt? Exemption is per rupees 100 per child and at the maximum of 2 children. So 100 into 2, 200, 200 into 12. So 2,400 is exempt. HRA 6,000 per month. The actual rent paid by him was 800 per month. So 6,000 into 12. So 72,000 is the HRA received for the entire year. Now out of that, how much is exempt, how much is taxable, you have to find out. Exemption is under section 10 subsection 13A. So there are 3 clauses or 3 points. Under that, whichever is less, that is exempt. Now what are these 3 clauses? Number 1, actual HRA received. 6,000 into 12 here. Otherwise it is for the relevant period, but here it is relevant period means 12 months. Second one, rent paid in excess of 10% of salary. Rent paid is 8,000. 8,000 into 12, 80,000 minus 10% of salary. Salary means what here? Salary means basic. Then 60% of DA. DP is not to be taken because it does not enter into retirement benefits. If DP enters into retirement benefits, that's also to be taken as salary. Then commission on sales at 1%. Only if the commission is based on turnover or sales, that is part of salary for computation of HRA. Okay, so what you have to do is actual HRA received. Second one, rent paid in excess of 10% of salary. What is salary? I told you. Third one, 40% of salary. If the employee is working in a metropolitan city, then it is 50%. Here nowhere it is mentioned. Therefore, 40% of salary. Of the three, whichever is less, that is exempt. The remaining HRA is taxable. So we'll come to the competition part later. He is given with a car of 1.8 cc for both private and official purposes. The running and maintenance of this car is met by him. So 1.8 cc means it is a big car. If it is more than 1.6 cc, then it is considered to be a big car, and this is used both for private and official purposes. And the running and maintenance expenses are met by the lessee. Therefore, if the car is small, 600 per month is taxable, whereas if it is bigger one, 900 per month is taxable. But if expenses are met by the company, the perquisite value would have been 1.2 1.8 cc means bigger car, and therefore the amount available for taxability is 2400 into 12. Smaller car means 1800, but here it is the expenses met by the employee or the SSC, therefore bigger car 900 into 12. So drivers services are not provided, it seems, so you have to simply ignore that for the time being. He has contributed 13% of his salary to statutory provident fund. So if it is statutory provident fund, there is no limit to the contribution of the employer regarding the taxability. Whatever may be the contribution of the employer to the statutory provident fund, it is not at all taxable. Whereas if it is recognized provident fund, any contribution of the employer above 12% is taxable. So also interest credited, anything above 9.5% is taxable. But here, the statutory provident fund, any contribution of the employer to the statutory provident fund is exempt. And company, of course, employee is contributing, so that will come under 80C. Whereas employer's contribution comes under the taxable part, and there, since it is statutory provident fund, nothing is taxable. Let me make it very clear. Employer's contribution to statutory provident fund, whatever will be the percentage, is exempt. Whereas employee's contribution to statutory provident fund is eligible for deduction under 80C. Okay. Again, what is salary? Salary means basic, that part of DA which enters into retirement benefits, and commission based on turnover. He has made the following payments. Professional tax comes under deduction from salary, gross salary. So that is 300 into 12. LIC premium paid 24,000. This also comes under 80. This comes under 80C rather. Contribution to ULIF, unit linked insurance plan. This again comes under 80C. Repayment of housing loan, principal amount only 18,200. This is also to be taken under 80C. Because maximum deduction available under 80C is 1,50,000. Okay, this is about the problem. I have solved everything. Once again, let us go through the problem, the solution to the problem. Let me once again explain what I have already explained. So it is just repetition of what I have done so far. So basic salary 22,512, that comes to 2,70,000. And then DA, entire DA is taxable 14,000 into 12, that comes to 1,68,000. DP 400 into 12, 4,800. Commission on sales 15 lakh into 1%, 2 zeros you omit, that comes to 15,000. Sorry, that should have been, this is 15 lakh. Okay, this should have been 15,000, not 1,50,000. Zero has to be omitted. CCA 700 into 12, 8,400. And then medical allowance is also fully taxable, 6,000. Entertainment allowance, regarding this separately I have given a working note. I will take it up a little later. Then yes, education allowance. Education allowance 700 per entertainment allowance is fully taxable, and deduction is available under section 16. But here, since the employee is not a government employee, deduction is not available. Education allowance 700 into 3 into 12. It is given separately given. Therefore, 700 each per month. So for 3 children, for 12 months, comes to 25,200. Whereas what is exemption? 100 per child at the maximum for 2 children, and for 12 months that comes to 2,400. Of the amount 25,200, 2,400 is exempt, remaining amount is taxable. House rent allowance. Okay, I'll take it up here. You see, house rent allowance. What is salary for house rent allowance? It is basic, and that part of DA which enters into retirement benefits, that is 60% of DA. Then commission based on turnover, so it is 15,000. Together that will be 3,85,800. Okay, so now compute the taxable HRE or exempt HRE. Actual HRE received is say 6,000 into 12, 72,000. Exempt under section 10 subsection 13E, list of the following. HRE received 72,000. Rent paid over 10% of salary. Rent paid is 96,000. Whereas 10% of salary, what is salary? It is calculated here already, 3,85,000. Of that 10% or 1/10, that comes to 38,580. 96,000 minus 38,580, so you will get 57,400. Then 40% of salary. So already you have calculated salary 3,85,000, of that 40%. If the SSC is working in a metropolitan city, then instead of 40%, that would have been 50%. Okay, so three values are there here: 72,000, 57,420, 1,48,320. Of these three values, which one is least? 57,420. This is exempt. See, it is given in exempt. Of the three, least one is exempt, 57,420. The balancing value is taxable. What is the balancing value? 14,580. So this has to be taken here, 14,580. Value of perquisite of motor car. I told it's a bigger car. So and one more thing, the amount is spent by the employee only. So 900. If it is smaller one, 600. So 900 per month into 12, so 10,800. Employee's contribution to statutory provident fund. Here, if the contribution is to the statutory provident fund, there is no limit. Whatever the contribution of the employer, that is exempt. So thereby all the items are covered, 5,27,580. Less deduction under section 16, entertainment allowance, nil. I told if the employee is a government employee, there would have been a deduction. What is the deduction? In that case, actual HRE received, entertainment allowance received, rupees 5,000, and 1/5 of basic salary. Of these three clauses, the value which is very least, that should be taken as exempt. The remaining amount is, of course, already taken. Not the full amount is taken under taxable salary, but here only the deduction is limited to the least of the three values. That is rupees 5,000, then actual HRE, actual entertainment allowance received, and 1/5 of basic salary. Okay, but here it is not available because the SSC is not a government employee. Professional tax, or whoever may be the employee, whether he draws higher salary or smaller one, does not matter. That is taxable. It is deductible. Tax has to be paid, but it is deductible. Professional tax is paid by every employee, but deduction is available from gross salary in respect of that. 200 into 12, 2400. Standard deduction. Earlier I told you standard deduction was there long back. Later on it was withdrawn, and in the recent past it is once again redrawn. Rather, it is again started applying. So now, well, actually last year it was 40,000 for the assessment year 2021, but for the assessment year 21-22, that means previous year 1920. So last year for the assessment year 2021, that means previous year 18-19. So the deduction was 40,000. But this year for 1920, previous year deduction available is 50,000. Understand? Under the heading standard deduction. Okay, deduction under section 16, that is over. Total amount is 52,400. As a result, taxable salary is 4,75,180. Now come to ATC. Already explained. I explained LIC premium 24,000. Contribution to unit linked insurance plan 12,000. Repayment of housing loan. For your information, only principal amount you have to take, not the interest. Interest has to be considered while calculating income from house property. Employees' contribution to statutory provident fund 13% of 3,85,800. That comes to 50,154. So together, all these four items together, it will be 1,04,354. So this is the qualified amount. Actually, qualified amount could go up to 1,50,000. But here, that much of amount is not there. So entire amount is qualified for deduction under ATC. So yes, if you are asked to calculate total income, then you have to first calculate gross total income, then deduction from ATC or any other deduction under ATC. So thereby I have solved the problem. Let me repeat once again. First you have to calculate the basic salary. Then all allowances you have to consider, DA, DP, and then all taxable allowances you have to consider. After that, you have to consider actually contribution to provident funds. Then you have to take perquisites, so that you are following a particular sequence, so that nothing is left out. So here, whatever item is there which is considered to be difficult, I have already explained. Anyway, we are going to solve some more problems wherein you are going to understand everything very easily. So thank you very much for giving a patient listen.